A bank statement open on a screen in Singapore. One line on it matters. Money in, 24,888,000 US dollars. The real payment into that account was 10,000 Singapore dollars. The image had been edited, and the colleague asked to help cover it up wrote back one word that mattered: forgery. You check a bank statement the way everybody checks a bank statement. You look at the number looks back. The company behind that screenshot was called Envy, and between 2016 and 2021, investors handed it around 1.5 billion Singapore dollars to buy nickel. Two high court judgments would later find that almost none of that nickel was ever bought. The people who handed it over were not naive. The general counsel of Temasek, a former president of the Law Society, the venture capitalist who made an early bet on Baidu, and a licensed wealth manager who put in her clients' money first and then her own. Then on one afternoon in August 2020, those investors were invited to go and look at the metal. A real warehouse, real nickel, filmed. Before this video ends, you will know exactly what that afternoon cost them. Start with the pitch, because the pitch is the whole trick. Envy told investors it could buy nickel from an Australian mining company called Poseidon Nickel at a discount, then resell it at the market price to buyers with names you know. BNP Paribas, China Min Metals. A Singapore metals trader called Raffle Met. Your money went in for 3 months. Then it came back with a cut of the profit. The returns averaged 15% a quarter, about 60% a year, compared with a Singapore fixed deposit in 2020, paying well under 1%. Now, to be fair to everyone who said yes, this was not an obvious fantasy. Buying discounted physical metal and reselling it to a bank is a real trade. Singapore finances that trade every day. The paperwork looked like the trade too. Letters of agreement, a stated floor, a prospectus. One line in it is worth holding on to. It told investors the company was currently licensed by the Monetary Association. Read it twice, there is no such body. The company was Envy Asset Management, incorporated in October 2015. Its founder was about 28, and every account of him says the same 3 words: a former accountant. Hold that. It is very nearly everything anyone can verify about the man at the center of Singapore's largest fraud case. And in March 2020, the people whose actual job is to check sentences like that, one did check it. The 19th of March 2020, the Monetary Authority of Singapore puts Envy Asset Management on its investor alert list. The list is public, it is free, it is searchable from your phone, and it takes about 9 seconds. To be clear about what it is not, the alert list is not a fraud finding, and it is not an accusation. It flags companies that may be wrongly perceived as licensed. Envy, the regulator said, was not licensed by it at all, so the warning went up. And nothing happened. Money kept arriving for another 11 months in larger and larger amounts. Why? Because the returns kept landing on time every quarter. The judge who later untangled all of this put the mechanism plainly. On the face of it, therefore, the company is managing to pay its debts as they fall due. But the underlying reality is that, sooner or later, the whole house of cards will collapse. For most people, money arriving on schedule is the only audit they will ever run, which brings in the person this story really belongs to. Veronica Shim spent her 20s as a Singapore Airlines flight stewardess, then close to 2 decades in private banking. And then she did the thing bankers dream about. She left and founded her own firm. Envision Wealth Management was licensed, regulated, staffed, real. From September 2020, her firm sent Envy 47.3 million Singapore dollars across 17 separate transfers. In November, she started sending her own. $955,000 of it. Your pension, your insurance, your parents' savings. All of it sits behind a professional exactly like her. So the smartest money in Singapore asked the only question that matters. Where's the nickel? And Envy said, come and look. The 24th of August 2020, in a warehouse run by the Dutch logistics firm Steinweg. Inside, 2,969 tons of primary nickel briquettes, stacked and countable. The metal is physically inspected. The count is recorded on video. The whole thing is broadcast live over Zoom, and the links are circulated to investors afterwards. Everything in that room is true. Here is what the video does not show you. That nickel had been sitting in that warehouse since 2016. Envy bought it from Raffelmet shortly before the inspection and sold it straight back to Raffelmet shortly after. At 2020 prices, the pile was worth roughly $40 million, standing in for more than $1 billion of investor claims, around 25 times its own value. And in 5 years of trading, it is the only nickel the courts found Envy ever touched. Now, the number that makes this the strangest fact in the case. In the months after that inspection, Envy took in a further 472 million Singapore dollars of fresh money. The proof was the product. Months later, on a webcast to investors, the founder played the tape again. The video shows the team conducting a stock count on the actual nickel briquettes that you invested in late last year. But the metal was the only thing in that warehouse that wasn't being written to order, because every statement they received had to come from somewhere. The civil courts eventually cataloged the machine, so take it in ascending order of nerve. Monthly spreadsheets showing every investor how their position was performing. A prospectus describing a purchase from Poseidon in February 2016, delivered to China Minmetals that April. 22 trading statements from BNP Paribas, recording nickel trades on the London Metal Exchange. From a bank the court found had no trading relationship with Envy whatsoever. Forged cargo insurance, forged letters of credit, forged bills of lading, bank statements for a Citi bank account in London that never existed at all. And worst of all, the one you have already seen, a screenshot showing $24.9 million over a real payment of $10,000. The messages behind it are quoted in the judgment. Here he is in 2016 on the paperwork for a deal that had supposedly already happened. We need to create the relevant documents to insert into the prospectus. Later about the screenshot. But the screenshot you have to help me cover up. It's going to explode in our faces if Lao Li-sheng knows the truth. The reply came back in Singlish, and it is the most important sentence in this entire story. Why you go fabricate this kind of thing to him is forgery lay. Notice who is being protected from the truth there. Lao Li-sheng was Envy's top salesman. The man selling the product hardest was the man being lied to about it. Remember his name. He is going to matter enormously in about 4 minutes. To be clear about the legal standing of everything I have just described, those are findings of a civil court made to the civil standard in a case the founder was not a party to. The criminal charges against him are a separate matter, untested, and he denies them. Then in February 2021, the payment stopped. The 16th of February 2021, Ng Yu-ji is arrested. A month later, he is charged and released on bail of $1.5 million. In April, authorities restrain around $100 million of assets. Look at the inventory. Roughly $21 million of that is supercars, including the only Pagani Huayra in Singapore. $15 million in jewelry, $20 million in property, and a yacht 126 feet long, against $0 of nickel bought for investors. On the 25th of May, the interim judicial managers report back. The purported nickel trading, they conclude, was non-existent, and the documents supporting it were forgeries. Then the charge sheets are read. The chief executive of a listed company down $3 million. A criminal defense lawyer, more than $1 million. A former president of the Law Society and the general counsel of Temasek International at around $5.5 million. And the venture capitalist behind an early bet on Baidu. $19.2 million US. Envision does not survive it. 30 people lose their jobs effectively overnight, and in March 2024, Veronica Shim is charged herself. Charges she denies and which have not been tested in court. In November 2024, the trial opens. NUG pleads not guilty to 42 charges out of 105. 2 days in, the prosecution calls its first witness. It is her. She tells the court that at least 2 investors had died directly or indirectly because of pressure from this case. That is her evidence, given under oath, not a coroner's finding. And then she says the thing this whole episode is built around. This case involved too many reputable people. These are not stupid people, and no one deserved to be scammed. She breaks down giving it. Across the courtroom, the accused does not look up. And then the case turns on the people nobody was angry at. Because when judgment finally came, the first people ordered to pay were the ones who never knew. The 29th of July, 2025, 2 judgments, same judge, same day. The directors go first. Lee Si-ye, the trained accountant who met the founder while auditing, is held liable for the entire sum investors put in and never got back. 593 million Singapore dollars plus 192 million US plus 880,000 euros. The head of trading, Zhu Xiao, up to 40% of it. A client support executive named Chongming Feng, a woman whose formal education ended with primary school and whose career before this was in food and beverage. 1.9 million. Then the court turns to the salesman. Lao Li Sheng, the man his own boss was hiding that screenshot from, is ordered to repay $17.9 million of commission. Benjamin Teo, 10.2 million. Shen Shuhui, 6.1. Ko Hongji, just under 5. None of them knew. Every court has agreed on that. The reasoning is the coldest sentence in the case. Commission is paid out of profit, Envy never made any profit, and a Ponzi scheme is insolvent from its very first dollar. So the money was never theirs to earn. They appealed. On the 22nd of June 2026, 5 weeks before this video was researched, the Court of Appeal upheld most of it and put the position on the record. The appellants were at the material time acting in good faith as they were unaware that the scheme was fraudulent. In fairness to the liquidators, they are not villains in this. Every dollar they claw back goes to the investors, and the alternative is that the money simply stays with whoever happened to be paid first, which leaves the one question that 5 years of judgment still have not answered. Follow the founder through the court record, and you can watch the system's trust in him drain away in numbers. Bail of $1.5 million in 2021, $4 million that July, $6 million by 2023, put up by his father and his father-in-law. In January 2024, he is rearrested on suspicion of fresh offenses, allegations that he diverted $500,000 from a property sale and arranged for a woman to impersonate his wife. Bail is revoked. He has been in custody ever since. His trial ran through 2025. The prosecution closed. The defense called no evidence at all. Closing submissions were filed in August. And then, nothing. As this video goes out, the verdict is still reserved. No court has decided whether NUG is guilty of anything. And until one does, nothing in this story is settled about him. Which leaves us with the strangest fact of all. 5 years of forged paperwork, judgments running to hundreds of pages, a courtroom that sat for months, and still no verifiable account of who this man was before 2015. Not a school, not an employer. Nothing you could put on screen. The most documented fraud case in the country's history was built by its least documented man. So take the lesson that actually transfers. The pitch that catches professionals is never trust me. It is come and check. Envy's single most persuasive act in 5 years was inviting people to verify. And what you verify is a scene that somebody else chose to let you see. Roughly 1,000 investors, an average ticket near $1.6 million. Every one of them looked. Check your own statement tonight, then ask who typed the number.